So good afternoon and good morning to some of you. As always, I expect the ARIN Treasurer's Report to be one of the highlights of this meeting, which I suspect is why we save it to almost the end of the 3-day agenda, as in saving the best for last. I can only assume if you're still here with us on Zoom, it's because this is what you've been waiting for. I believe I promised you all a joke when we last met in October. Have you heard the joke about the interesting accountant? No, me neither. I could not serve as treasurer without the help and support of the ARIN staff and my colleagues on the Board of Trustees. I would like to thank the Financial Services Department for their continued dedication to evolving financial reporting and metrics, and for their commitment and ability to transition to remote financial services over the past year. The Financial Services Department, under the CFO's leadership, has accomplished a great deal over the past year, and I'm happy to be able to share some of that with you in my presentation. Next slide, please. I'm going to update you on the activities of the Finance Committee. I will review the 2020 revenues and customer growth, operating expenses and budget variances, look at ARIN's financial position, provide highlights of the investment portfolio, and then finally look at the 2021 budget. All the things you've been waiting for. Next slide, please. As you can see, the CFO and I keep the Finance Committee really busy. It's worth noting that I haven't yet met the CFO in person, but we spend a lot of time on Zoom getting things organized for the Finance Committee and aligning activities for the ARIN Financial Services Department. Since we last met at ARIN 46, the FinCom recommended board approval of a new auditor. So we're now working with BDO, and in fact, BDO will be presenting the audited 2020 financial statements to the FinCom tomorrow. We've also approved a new investment consultant, and they are now managing the ARIN investment portfolio. While undertaking that activity, we finalized and recommended board approval of the new and improved investment policy statement, including revised return objectives. And last but not least, we reviewed and rebalanced the investment portfolio to align with the new target asset mix that's set out in the new and improved investment policy statement. We worked through several iterations of the 2021 budget and received board approval of that budget in December of last year. As you might imagine, many of our activities over the last year were complicated by the impacts and uncertainties that we all experienced due to the pandemic. So I'm really pleased and delighted with all of the things that the Financial Services Department has managed to get done in the past year to the benefit of ARIN. Next slide, please. This chart shows you total revenues for 2020. Our revenues are about 4% below what we budgeted. The annual registration maintenance fees were $18.8 million in 2020, an increase of more than $350,000 over 2019. New registration assignment and allocation fees were $1.5 million in 2020, an increase of almost $200,000 over 2019. Together, the registration fees were $20.3 million in 2020, and that represents 97% of our total revenues. In aggregate, ARIN's revenues were just slightly ahead of those in 2019. Next slide, please. Where does revenue come from? Comes from our customers. You can see in this chart, registration services plan customers increases occur mostly in the small categories. From September 2019 to March 2021, RSP customers grew by 831, or 14%. Most of that growth occurred in the small to 3x small categories, as we expected. Combined end user and ASN only customers at March 31st, 2021 were approximately 16,000, which is relatively flat compared to September of 2019. We can also see that transitions from legacy, which is non-billed, as you know, to LRSA is moving in the right direction, although slowly. 100 legacy customers have signed an LRSA agreement since September of 2019. ARIN will be working on various strategies to reduce the high number of legacy customers over the next while. Next slide, please. Operating expenses. As I discussed at ARIN 46, the pandemic limited the spending in several of ARIN's expense categories in 2020. This resulted in a $2.6 million budget variance for the year. Ultimately, operating expenses were $21.4 million in 2020, which was just slightly more than ARIN's 2019 operating expenses. On the next slide, I will highlight the major operating expense variances. Material budget variances are shown in this chart. Personnel expenses were slightly under budget due to a small variance in the number of employees in 2020. Also embedded in this variance is accrued comprehensive leave. As I reported to you in October, the health and well-being of the staff is of paramount importance to the board, and ARIN continues to encourage team members to take time off and highlights the fact that time off is a necessary break to maintain good health, both physical and mental well-being. The largest operating expense variances occurred due to the cancellation of in-person member meetings, travel, and outreach activities, as you would imagine, during the past year. Those cancellations drove a combined budget variance of $2.1 million. Next slide, please. The statement of financial position, or the balance sheet, continues to represent ARIN's highly liquid financial position. ARIN has almost $35.5 million in liquid assets, represented by cash, accounts receivable, and investments, to meet its ongoing operating needs. You will note that property and equipment was restated to reduce the amount for capitalized software development costs. And we also aligned revenue recognition for all our accounts receivables. This was done during the year-end audit to comply with GAAP reporting requirements, one of those fun things that accountants love to talk about. Next slide, please. The financial markets were very good to ARIN in 2020. A return of 15% on the long-term reserve fund added almost $4 million in value during the year. As noted earlier in the presentation, the FinCom changed the target asset mix for the long-term reserve fund. This was done to protect the investments from potentially large negative swings, as we saw in 2018 and in March of 2020. Just last month, the FinCom elected to reduce investment risk by adding a more conservative investment portfolio mix. The Finance Committee and ARIN staff continue to work very closely with our new investment consultants to manage our investments. Next slide, please. Net assets are demonstrated or shown in this chart. Net assets at December 31st, 2020 were $27.5 million. This is a $4.3 million pardon me, let me start that again. This is $4.3 million or 18.5% more than budgeted net assets for the end of 2020. So as you can see, this favorable net asset position is the result of the lower than budgeted expenses in 2020 and the higher than expected investment returns. Next slide, please. The increase in those net assets and the under budget operating expenses result in an improved operating expense coverage ratio by the end of 2020. This is a metric that we have looked at the last few ARIN meetings. The financial results in 2020 grew the operating expense coverage position by 15 percentage points. Next slide, please. However, our return to somewhat, hopefully, normal in 2021 reverses the gains that we saw in 2020, with budgeted operating expenses of $24.4 million for 2021, we have a budget that requires use of investment funds to balance the budget. This means that the operating expense coverage ratio is expected to drop by 24 percentage points during this year. Continued use of investment assets to balance the ARIN budget could significantly reduce the amount of investment funds that ARIN has for use if the organization is ever in financial distress, or it would also limit the availability of funds for strategic investments. And with that, I turn to my last slide, please. Thank you for your attention, and I'm happy to answer any questions.
Questions for Nancy through the, we already have 2.
Wow.
So staff
Yeah,
want to do their thing.
She's positive, or she's the one everybody wants. I have David Huberman from ICANN. You mentioned that you and the CFO have further protected ARIN's reserve against risk by more conservatively allocating capital. Can we take that to mean that a higher percentage of funds allocated to fixed income securities?
Where's Brian? Where's Brian?
Oh, I can find him for you.
I actually don't know if Brian's on, but I'm happy to take it.
Wow, John, do you know the answer to this question?
Actually, Nancy, you'd be amazed how much I know about those financials.
Wow,
So
great.
why don't I start, unless Brian, you on? Okay, I'll start. Brian can correct me. But actually, the FinCom was involved in all of this. The FinCom, consisting of several of the members of the Board of Trustees, and Brian, our CFO, myself, and Richard looking on, talked to our investment firm, our new investment management company, about looking at the window of risk and expected return. And we've been using a fairly generous risk envelope, and that's allowed us to have great returns, but it's really not in keeping with the purpose of our investment reserves. Our investment reserves are supposed to be to bolster the financial security of the organization. So by dialing down the risk envelope just a bit, we're able to get something that's more responsive, better suited for the organization. That does mean, when it comes to allocations, we ended up with slightly higher allocation to fixed income securities and slightly lower investments when it comes to equities that would have been considered more risky. And so it's a very minor tweak, but it does bring the risk envelope down and the anticipated return down. The anticipated return drops, Nancy, if I remember correctly, we dropped down to about 2.5% to 3%, where we might have been 4 to 5 before for anticipated return.
And we have Brian now, so if Brian wants to turn on his video and comment, he's welcome.
Brian said that is correct.
Yes, Brian said that's correct. He's shy sometimes, but there he was going there. Brian, yes, you can see he wasn't expecting this. He doesn't have the official approved background, but
yes, I did not have time to get my jacket on, but that is correct. We reduced the estimated target return by about, I would say, 3.2%, going from a little bit more than 6.5% to about 3.75% is the actual target return now. And that was done by realigning the target asset mix, which reduced the amount of funds invested in equities and increased the amount of funds invested in the fixed income portfolios.
Fixed income or equivalents. Thank you. Thank you to all for that. So
Great question, David. Thank you. And next time I'll have the investment policy and the investment, the asset mix in front of me so that I can answer your question.
All right, the next question I have is from Andrew Dull. He asks, Nancy, thanks for a great presentation. Do you have any detail about the 4% under expected budget for 2020 revenue?
Yes, I do. We didn't meet our budget targets. Now, Brian can speak to that as well. So Brian has the detail on that.
For the 2020 revenue budget, I think we overestimated the amount of new revenue from initial registrations. I think we went, the budget was based on previous years' trends, which is not necessarily something that we can rely on going forward based on the changes in the IPv4 marketplace.
And given it was a pandemic, yeah, some of the projections were just a bit different since business models out there were obviously thrown into a loop. So thanks, Andrew.
Thanks, Andrew.
One more question, I think.
One more question. Again, thanks, Nancy. This is an extremely digestible format, and we appreciate the breakdown.
Great, thanks, and thanks to Brian for that digestible format.